Now, today's episode is fire, not just because Sam Silverman's story is incredible, but because it's proof that if you combine clarity, conviction, and tactical execution, you don't need 20 years on Wall Street to raise eight figures. Sam raised over $25 million in his first 16 months, and now he's past $85 million in total capital raised. But what really got me, it wasn't the numbers, it was his clarity. Clarity on his investor, clarity on his offer, clarity on what freedom actually looks like, and how to reverse engineer a fund around it. You'll hear how Sam left a multi six figure corporate sales role to build a capital raising ecosystem that helps other fund managers and operators actually replace their income, not just chase a theoretical back end check. And somewhere in the middle of this conversation, it hit me. Every new fund manager should listen to this episode before they ever pitch an investor, because what Sam breaks down is the difference between hustling for capital and designing a system that attracts it, which is, by the way, exactly what we do inside of Fund Founders. Let me break it down this way. If you're listening to this right now and you've launched or you're trying to launch a fund, you know how hard it can be to figure it all out. You're trying to be a fund manager and a capital raiser and a marketer and a legal expert and a systems builder all at once. That's why we built Fund Founders, the only complete ecosystem to help you legally launch and structure your fund with full docs, SEC compliance, and attorney support. Automate your capital raising with an AI-powered CRM. Get step-by-step support to build your investor avatar, pitch deck, talk tracks, and funnel. Plug into a network of active fund managers doing deals and raising money every day. We don't just give you the education, we give you the execution tools. And if you're further along, we've got the Founders Circle, our high ticket mastermind where we help you raise your first or even your next $1 million with a concierge legal and capital strategy built in. If you want to stop winging it and start raising capital like pros, this is your chance to get out of the guessing game and into growth. So head to wearefundfounders.com/apply or click the link in the show notes. Let's help you launch, scale, and grow your fund with clarity and confidence. Now back to Sam, because this episode will show you why clarity of your avatar is everything in capital raising, how he used LinkedIn to build $85 million investor base, why tech sales taught him everything he needed to know about investor psychology, and why private equity is the next mountain for most fund managers after real estate. We also dive into the difference between passive income fantasy and real financial freedom, and then why Sam's community freedom framework is helping high income earners break free of the W-2 grind. And we're going to talk about some really interesting things like why paving companies and income funds may be the next big thing for high yield fund managers. If you've ever wondered what it really looks like to raise capital at scale without losing your mind or your mission, this conversation will change how you think. Let's get into it. Here's my interview with Sam Silverman. What's up? Welcome to another episode of Funds on Fire. I'm excited because today I feel like it's cool because I get to actually meet a guy that I've talked to online a good bit. We've gotten to know each other over some time, and it's really cool to see where he's the trajectory of his growth. I think I started in Raise Masters, and that's where I kind of got to see you and started following you and getting acquainted to who you are and what you were doing, and then seeing you come up and start even your own community that has a very specific niche and goal behind it has been really, really cool to see and encouraging to me, man. So just know that I've enjoyed watching you from afar. I'm excited to get to know you today and excited for our listeners to know who you are as well. And so Sam, I would love if you could go ahead and give the listeners a little bit of idea who you are, where you're from, and what you do, man. I'm really excited. And we'll dive in, just so you know, we'll dive in a little bit because you've got a really cool corporate background that you've transitioned to and then to where you are today.
Yeah, thanks, Evan. Super excited to be here. So my background, right, coming out of college, I had no clue what I wanted to go do. I knew I wanted to work myself at some point, but again, had no clue what that was. So in the interim, my thought was, let me go get some tangible skills. Let me go figure out how I can make some money. And that way in the future, when I actually do figure out what I want to go do, I can go a lot bigger, a lot more quickly. So naturally, I end up in sales. And I end up in the sales that you are cold calling, right? Leveraging LinkedIn to go book meetings, like doing the low level work where you learn a ton about human psychology, about speaking about money, about how to go prospect. And those skills have then helped me massively going forward. So I was in corporate for 6 or so years, right? Climbed the ladder really aggressively, really quickly. And I got to a place where each stop in that corporate journey, my eyes were open to what was possible. And primarily that was making more money. But what I saw in a big way was that there are people around making $1 million plus a year, and they were 55 years old in their corporate desk job, right? Away from their family, working 50, 60-hour weeks, commuting 2 hours to work. And their whole life was at the whim of someone else, right? In terms of dictating, hey, this job is no longer for you and you're out. So for me, I wanted a lot more control over what it was that I did in terms of my travel, in terms of who I work with, in terms of what I do with my time, and in turn started investing in single family houses, right? I'm like, this is the quickest path to passive income. It was all I knew. And I was wrong entirely. Yeah, I was totally wrong. So started buying homes, then got out to like 10 homes. And when I looked at business, there's two things I look at, right? One is, can I grow this big enough where it's worthwhile? And two, if it grows that big, do I want to manage this business? And the answer was maybe over time, likely not, and absolutely not to the single family business. So I sold all those homes off and started investing as an LP, right? You know, it's truly passive because for me at the time, the opportunity cost of, you know, getting a new home for $200 a month of cash flow and the time it took to go do so was costing me tens of thousands, but hundreds of thousands of dollars a year in my corporate role in terms of performance and freedom. So sold those off, started investing as an LP, and started from there realizing that hey, there's value in pulling together funds from your network, right, and investing in operators that you enjoyed. So I'll stop there so that I don't keep rambling, but that's been my first foray into the real estate and the capital raising space itself.
No, that's great, man. And I love to talk about because like it seems like one, it seems like you're a young guy. I don't know how old you are, but I would almost imagine you're younger than me. And I can almost see because like I follow you on Instagram too, and I see like you're doing cool things. Like you're out on a yacht, you're doing this thing, and I'm like, look at this guy partying it up. It's so cool. And so you're a young guy that seemed to have gone through this really quick progression. But what I know, and I like to do a lot of research before this, is one thing I know about you too is you started also really young. Like I think at 14, you started businesses and even sold a business at 14. And I think there's another part to it too. I also think you have a separate mindset that a lot of people don't understand. So you and I both played baseball in college, which I'd like to hear more about. And so I played D1 baseball, and my coach said, Devin, it doesn't matter how good you are, it doesn't matter any of these things. Um, the only thing that matters is how you compete, if you can compete. And I think there's a different mindset for athletes that I'm very curious on how one, your early experience in business to being an athlete to even crushing it in sales has led and grown and cultivated to how successful you are in capital raising. Do you see any of that influence in your entrepreneurial style today?
Yeah, so to cover the baseball piece first, I'm super grateful I was a little bit better in baseball, right? I'm 30 years old now. I have a lot of friends who played minor league ball for 6, 7, 8 years, and they're starting their life over at 30 totally from scratch. So I'm really grateful I wasn't just a little bit better where I could have hung around longer and not made it. If I was a lot better, different story, right? But I was not going to go play everywhere as a career. But I think you learn a lot about yourself too, right? When you go out on a field, or I still play pickup basketball all the time, right? Super competitive in that sense,
Yep.
where you go out in the field. I mean, every injury I have now comes from there, but you go in the field, the court, like you have no assets, you have no standing, like it's just every person for themselves. I think that really ties a lot to the business, the sales world when you first get started, right? In a sense of you got nothing, right? Go out and work for it. And it's a mentality that you start building and a competency then have where you can go outwork your learning curve in a lot of ways, right? Like in my first sales roles, I can go do more volume, right? Because it's an equation. What's your output times what your conversion percentage is? And when your conversion percentage sucks at first, do a lot more. This will get better, right? So in turn, you can go outwork that learning curve and go outwork other people too. So in my corporate days, 5, 6 years, like I was locked in an office for 70, 80, 90 hours a week, right? No social life. But I knew that, hey, if I can go build this in a certain way, I can then leave and not have to ever go back. So I viewed it as that short-term 6-year sacrifice of being very dedicated, isolating myself in certain ways. Then it allowed me to go have the capital, time, and resources to go do my own thing and allow me to keep doing that in perpetuity as well.
Yeah. Well, and even and that's really good. I actually love when you talked about you're kind of your own. You started over it, and then you got to make a name for yourself, even out there on the court with new guys, because you have to earn the trust for them to pass you the ball to be able to take that shot, type thing. So really cool, man. And now I'm curious. I'm just curious, just for the sake of me and who I am. I've been working since 14 as well, but I didn't sell a business since 14. What was that like? even that early entrepreneur experience like for you? Because I'm it makes sense that, you'd work in corporate, you'd crush it at sales because that's your own, like, almost your own entrepreneur within a company within a company, and then you start your own thing. What was that like for you at 14?
Yeah, so we did teen nightclubs in New York where I'd go rent out a big event venue. We'd get a DJ to go there, right? No alcohol, nothing like that. And I'd get a kid in each school to go sell tickets on purely commission. So when you look at demand, right? One of the biggest things you have with like social life is FOMO, right? If you're missing out. And we'd go build teams of kids in each school to go sell tickets, right? So you had a presence, right? You find something who's popular in each school to go sell tickets. They were paid a commission on it, right? From the tickets they sold. And then in turn, at the door, we'd get to a level of profitability and we cut it off. And you can then go charge 4, 5, 6, 10 times as much at the door because you have the demand for it, right? And you cut off the supply. So we ended up doing called 6 or 7 events and actually sold the company. I was moving out of the city for a couple of years, my dad at the time, and just kind of needed to be done with it. But it was a really, really good high earning type experience where you learn a lot about how to go build demand, how to market, and also how to go managing teams of 15-year-olds, teams of 15-year-olds on the sales side. You learn a lot about how people act and a lot of patience too.
Yeah, there's no doubt. And I'm curious, did your dad help you a lot with that at the time? Like,
Yeah.
he you business person? Really? It just was your own idea of you and some kid friends and got together and just kind of learned about it?
Yeah. Yeah. It was more so we saw things like it and we're like, okay, this is really repeatable to go do. Like all that is how to go drive demand, right? Like you look at a nightclub or restaurant, most are pretty similar in a lot of ways. You just have to go figure out how to get people there. And if you go solve that problem, that's the biggest thing you have.
That's good, man. Okay, cool. So this is really cool, man, because I think it sounds like you've had these, and it's funny because this has come up on like every podcast so far, but we've got these early life experiences that have prepared us for who we are right now. And so it sounds like for you, right, you've had this almost like this sales experience from coming from leading 15-year-old sales team, commission only kids to leading a sales team and managing, I think what I've seen like a company that did 50 million in revenue. What direct sales tactics translated best from from what you did then, from what you did in your corporate company to what you do now as you raise capital? Can you share some like specific things that helped as far as sales or really translated well, like sales philosophies or things like that for raising capital?
So it's funny when you look at the sales world, you go two different directions, right? One direction is you keep selling bigger deals, right, as an individual rep. Or second, you work internally and you keep moving with the ladder in leadership. And I've had two bigger stops in corporate, right? Both 2+ years. The first one, I built a team from scratch from zero, about 120 people globally, and started the ground floor, grew the team really aggressively, public company. So there, I learned a lot about hiring, right? Interviewing, how to get the most out of people, how to go manage different types of personalities, right? If you're raising capital and kind of working with investors, that you may have people who fit very different profiles that you work with. So understanding how to go interact and find common ground with each person is huge. You also learn a lot about how to go deal with corporate bureaucracy, right? The higher you go up on the sales side internally, the more you deal with things internally versus externally. So for example, if you're a VP of sales, you're likely dealing far more with your finance, operations, product team than you are with actual customers at times. Not saying it's right or wrong, but just a different type of interaction. So you learn a lot about how to go deal with high pressure conversations with people who are quote unquote above you, right? You learn how to go manage a budget in a meaningful way. But I'd say in the sales side myself, when I was actually doing the work, you learn a ton about psychology, but how people interact, how people think, how people make decisions. And you learn how to go prospect. I think one of the biggest values of sales is the ability to go hunt, right? To go understand who is your buyer profile or investor profile, for example. How do they think? How do they operate? Right? I think to be able to go build a very in-depth analysis on who they are, how they think, how they operate, what they do, what they feel, right? How different things affect them. And that way you can go be really aligned to them.
Yeah.
So for on my end, I've almost all my investors started with people who were in tech sales or software sales because I get in the head of that buyer, investor extremely well because it was myself. So it becomes much more translatable. So I'd say the ability to go hunt, to go get meetings with those people, to get in front of the right people is hugely valuable.
I think um I'm trying to think because like I know one of the things that you talked about specifically was the ability to know people and who they are, because I think we talk about like the target avatar a lot, and people are like, oh, that's like woo woo or all this thing, but like it really is important to hone down on that person, because like if you can go and hunt like you talked about, and you can understand that how to talk to that person, their psychological predispositions, right? Because if you're talking to somebody that's, and do you do like any of the personality profiles? Do you understand, like do you do like Enneagram or disc assessments or things like that?
Yeah, so DISC I've done a handful of times. Culture Index I've done. I haven't done the Enneagram myself, but I've kind of run my other stuff through it and it's giving me a good idea of where I'd fall.
Yeah. And that stuff's important too, because like talking to somebody who's a high D is going to be a little bit different than talking to somebody who isn't. And so it's good
Yeah.
to understand those things. So I read, and I think you posted this, that you've raised over like when you first started, you raised over 25 million in the first 16 months. And now you've crossed probably like over 85 million raised, I think is what I saw. What were some of like habits for you specifically, like systems or tactics that made for, I mean, that's kind of like explosive growth. And what the thing I'm even a little bit more curious is what broke along the way for you that you had to figure out like, okay, this is a little bit different when you're getting to this much. I've got to adjust this thing. Before we continue, I wanted to tell you about something that's been an absolute game changer for fund managers and capital raisers just in general. If you're trying to manage any investor relationships with spreadsheet and scattered emails, I want to introduce you to FundFlow OS, the intelligent capital management platform that's transforming how capital raisers raise and manage capital. FundFlow OS gives you everything you need in one powerful platform: investor CRM, automated deal pipelines, distribution tracking, document management, AI-powered tools that help you crush investor relationships, conversations, and close more deals. Whether you're raising your first fund or managing syndications or doing fix and flips or trying to raise capital to hold properties, FundFlow OS streamlines your entire workflow, track investors' commitments, automate follow-ups, generate professional reports, and even provide your investors with a branded portal to view their investments. Heck, if you're even lending, you also have a lending portal that you can have when you lend out your own money. Plus, the built-in AI tools, you can generate compelling fund summaries, craft persuasive emails, and get instant answers to complex investor questions. The best part, you can try everything completely free for 30 days. That's right, a full month to see how FundFlow OS can transform your capital raising process. Just visit funflowos/fire. That's FIRE. No credit card required. Stop managing investors like it's 2010 and step into the future of capital management with FundFlow OS. Go to funflowos.com/trial and claim your 30-day free trial now. Now back to the show.
Yeah, so I think one of the biggest things I've used is just LinkedIn, right? Like
Really?
LinkedIn is an absolute gold
Yep.
mine. If your people and your target investor avatar uses LinkedIn,
Mm.
right? So for example, if you're targeting doctors, they may have a LinkedIn profile, but they likely don't use it, right? Because it doesn't actually tie to their role. For me, I can go on LinkedIn and build a really comprehensive list of people who are VPs of sales, directors of sales in tech, in software, right? They've been in their company for a handful of years. And for me, I can go make a really quick list of those people and go target them very efficiently. And in turn, if you're in sales and you're in tech and LinkedIn dings, you think money is there, right? Because your clients may communicate with them, right? Your prospects. So in turn, I know they're going to see what I'm sharing, right? It's become harder in the last while. There's all of the AI and bots on LinkedIn, right? In terms of it's become a lot less organic, but there's still a lot of value there if you can go target the right people and create content that aligns to them. So I think something that people may get stuck with is that they feel as though, let's actually play it on you, for example. Like, who's your target investor avatar? Like, walk us through who that person is.
Ooh, good question. So my target investor avatar is somebody that's in 30 to 55 and is actually more interested in making an impact in the world with their money. So I don't have a specific doctor because like I don't relate super well to doctors. But I do have a target avatar that's more interested in making a massive impact in the world. And so most of my stuff when I talk about raising capital, it's like, sure, your money can make money. That's going to be the easy part, but this is the impact that your money is making. And so our target avatar is 30 to 55 is what I have. Uh, Typically, there's somebody who has the money to be able to invest, but also really cares about a little bit more of like philanthropy, what's going on in the world, and then how they can make an impact in the world. So most of my marketing when it comes to raising capital is towards the impact that money is making. Does that make sense?
Yeah, sure. So, but on your own, again, like that's easy to go speak to, right? Where you can be very intentional as to the kind of people that you write to and you attract, right? If you're writing content, if you're creating videos, whatever it may be, you can speak to that impact piece. If people don't care about it, they're not going to go have a good feeling about it. But if they do care about it, it helps pull them in, right? So what you want to have is you want to have points of view and you want to have really clear intentions to who that person is. At times, I'll talk to people and they're like, my target investor avatars, they're accredited, right? And I'm like, oh,
Yeah.
so you have no clue.
Yeah.
And you want to be the more specific you can be, the more you ice other people out, which is
Mhm.
something you want to go do, right? For example, even on my end, if you're looking at VPs of sales in tech or directors of sales in tech or CROs, right? Seems very niche. There's over 500,000 of them in the United States, right? I think I've crossed $100 million with 300 or so investors. And what people don't realize is that you can go really deep and you still have a massive amount of market to go cover in that sense.
Great. Yeah, I've heard the quote, if you're talking to everybody, you're talking to nobody. And
Correct.
so
Yeah.
we have to make sure that we are very niche down to who we're talking to. Okay, so I love this because it sounds like now I want to transition to this because I know one thing that I've seen you do really well in, and I think it's so cool, is target that niche. And then you even niche down a little bit more to a specific type of person who's looking for, and I'll let you explain it a little bit more, but who's looking for that freedom. Hence the name of what you do is like you guys are you have the freedom framework, and I believe you have the three parts of it: cash flow, strategic growth, and long-term equity. That's the last thing I saw when I was doing some research. And so I'd love for you to clarify, like, what does freedom mean for you and how do you implement a lot of that stuff? Because true freedom means, I think you said true freedom means you decide what to prioritize. Freedom isn't given, it's built. And I'd love for you to expand on that.
Yeah, so I kind of view freedom in two main buckets, right? We have our investment arm, right? People who want the freedom side more passively. And we have our community, where people who are looking to be more active, whether it be raising capital, whether it be buying a business, whether it be buying real estate, right? We want to help people on both sides of the equation, whether you want to be active or passive, or usually a combination of both. And I think freedom for me, like I saw that big pivot myself when I'm like, okay, first it's make more money, right? To allow yourself those options. Then it becomes the ability to be really intentional in how you want to spend your time. So I think people at times, like the exercise I always do is, what do I want my life to go look like, right? In terms of how much do I need to go cover that, right? On a monthly expense. Where am I? What am I working on? Who am I spending time with? What am I doing? Right? All of those things are really important. So when you look at, if you kind of build back intentionally of, if I want my life to go look like this, what do I say no to get it there? What do I say yes to? Right? It helps give you a lot of clarity. So for me, it's been really intentional with what those things are to go backtrack into that.
Nice. Okay. So as you're doing that, then, so you've got this really good idea of freedom. How are you then attracting the type of investors? So you're saying you're going on LinkedIn. So I'm trying to connect like your vision and your purpose with your tactical and strategy, right? So like how then are you communicating that freedom aspect of, hey, you work this 9 to 5, you're probably really successful making this money. Let me help you to build this passive income level, as in being an LP with me. So then how do you actively market that on Instagram to grow your, like to grow your investor list?
So we actually probably have never had an investor from Instagram.
I'm sorry, I meant LinkedIn.
Yeah.
I'm sorry.
So Instagram too, I've just found we're working like a little more on it now.
That's funny. I get a ton of investors from Instagram.
Yeah. Yeah, it's just from my niche, it's like tougher in the sense, or at least I found it more tough, where
Mhm.
um it's hard to go tell who is mine on Instagram as well, right? You see a lot of people who appear very different there, right? So I found it harder to go target people in an organic sense. On LinkedIn, right, when you look at that VP of sales making $400,000 a year plus, it's a really common story for them, right? Because you understand how they think. And for example, they may have, part of it too is a safety piece for them, right? If you can go sell, you have massive career stability, you have very low job stability, job security. And the reason I say that is that you're one good quarter away from getting a 100K check, you're one bad quarter away from being fired. And I've been in both those seats. And for them, it helps balance out that piece of it, right? They may as well, that person who's in tech, they may have their base salary, their commission, their RSUs or options, right? Their employee stock program, meaning they have a massive amount of their money tied up in their company. So ability to have things that are non-correlated to the stock market, they're non-correlated to their day job, helps in that feeling of comfort. Also, as relates to cash flow, right? If you're earning really well and you can go plug away into, say, a debt fund and make yourself 12% per year on it, right? You see a quicker path to go start replacing certain bills, right? To go start building those things up and then allowing yourself, okay, maybe instead of working till 55, I can cut it down to 45 or cut it down to 38, right? You start thinking that way too of how much I have to go park here to go get to that path. So part of it is the math behind it, right? And part of it is to just help them understand, I was in your spot. This is how I did it. This is the kind of how I think about it. And just presenting optionality to them too, I think is super helpful.
Yeah, that's good, man. And I love the way you're talking about presenting it because I think you've talked about before that passive investing alone often isn't enough for real freedom. Where do most people misunderstand the passive income game? Because it sounds like you're educating them along the way. And how do you recommend combining it with the kind of the things that you're doing, the strategies and the way that you're reaching out to them to explain that to them, if that makes sense?
Yeah. So I think the numbers are really simple, right? Where if someone's like, hey, I need to go replace 200K a year to actually live off of. And you're like, okay, if you make 8% a year on your money, you need $2.5 million. People start seeing it as, okay, what's my path to getting to those numbers? Some people already have it, some people don't. And it's just seeing, okay, can that be a good supplement? Can that go buy us more, again, optionality in how we do things, right? Take some pressure off. But I think a lot of it too is to help them understand what their options actually are and the impact behind those things too. It's also telling someone too, hey, I have 50K. Can this get me to retire early? I'm like, likely not, right? So it's being really honest with someone too as to need to have these numbers play out. If you look at stacking, right, it can get you here. But it's also being really transparent too that if you want to shave more years off your career, you may have to go the active route. But unless you're making, $500,000 plus, $1 million plus, investing passively really quickly to get there is really tough to do so in terms of yield. But it's a great complement to the day job. Alternatively, if you're like, hey, I only have 100K, 200K, how can I go retire early? There's a lot better routes on the more active side to get to that place where you can go, really shape meaningful years off your career.
Oh, that's good, man. Now, I'm curious now. I think this has been so fantastic. Just talking about the capital raising side of it, engaging with people, helping people, especially our listeners, to see like how can they begin engaging with other people, finding the right avatars and the people to raise from. But for you personally, man, what type of funds like what type of deals do you specialize in? I know that you started with single family properties, quickly realized, as many do, not passive, not great, not they're not the best asset class unless you are a heck of an operator. And then, so what have you transitioned to mostly in doing? And it sounds like you've got a pretty sizable portfolio in the short period of time that you've been doing it.
Yeah, so now we still have holdings in real estate. I think going forward, we'll primarily focus in three main areas, right? One being more the roll-up space in business, right? So
Mm.
right now we're working on a paving roll-up where we're acquiring paving companies. We're merging together all back-end operations, right? We're looking to go grow the companies through synergies there and looking to go exit the entire portfolio to a more institutional type buyer.
Yep. Yeah,
That's one.
quickly. I was gonna say really quickly, I think this is such a unique, not a unique thing. I think this is cool for people to understand and think of because what you're doing is you're leveraging economy of scales by going,
Correct.
because correct me, and you'll have to let me know, I guess. But a paving company, I mean, I don't know what that sells at, like a 6x EBITDA when you
So
go to sell.
yeah, so right now we're buying them between 2.5 and 4.
Okay.
And when you hit a level of scale EBITDA wise, call it $20 million, that can go as high as 8 or 9x. So you're really creating a massive arbitrage in multiples. So for example, it's like real estate, buying a deal at a 10 cap and you can go sell it in the future at a 4 or 5, right? In structures. So you're getting the synergy across the companies in terms of labor, in terms of subbing out different work, right? But then you're also have the future eggs potential where you're getting multiple expansion in industry too. And there's all these bigger private equity firms that are willing to go pay a premium for groups like ours to go do the legwork for them, to go acquire these smaller companies. So they have to go deploy a check that's say 50, 100, $200 million into actually buying a group of companies as well.
Now, are you doing that mostly? Because I know you're in Tampa. Are you doing that? I don't know if you're still in Tampa, but are
I'm in
you
Miami, yeah.
okay? Are you doing that mostly locally, or are these in different states and different cities?
So we're building our platform in the Southwest. So right now, namely Texas and Arizona. So we're
Nice.
kind of having a geographic focus there as well.
Fantastic. Okay, so that's number one. You're doing essentially PE roll ups. What's the second one that you're doing?
Yeah. So second is a debt fund we're rolling out here soon too on the income side,
Fantastic.
right? And the reason why I think it's so powerful is that there's been a big rise of the fund manager, right? The person who raises capital through SPV for other people's deals. And what we found is that the fund manager makes a little money up front and hopefully a lot of money in the back end. In the middle, they're SOL, right? And what
Stop.
we've correct. So what we found is that there's a huge opportunity for both investors and fund managers to have more yield in the short term.
Mhm.
So we've created an income fund around this where we can go pay investors 15, 16%, right? Monthly payments in structure targeting that, where if they go pay their investors 11 or 12, there's that 4 to 5% spread. So for example, if a fund manager goes out and raises $5 million, they can build themselves essentially a $250,000 salary per year in structure around that, which then helps to go one, leave your job and go full time, but two, it really helps you go find projects in the future that may give you bigger upside or that window is further out for gratification. So it allows you to go focus on those things and make sure you can go eat in that interim period where we've seen to be a huge issue across the board. So the former, right? Number one being a big equity growth play. Number two being a really good cash flow play, right? That also allows fund managers to have the arbitrage there too. And third, I still invest personally into small businesses and companies for either growth capital or acquiring them with a partner with the intention of we'll hold on to these companies likely forever.
So you're not actually investing into any multifamily anymore? Because I think at one point you're in multifamily, self storage. You kind of just have the. Do you still have those properties that you have positions in, and then now you're just focusing more on? It sounds like more on PE and debt side of things.
Yeah, so we still have a lot of positions in a lot of real estate assets. Um, Depending on how things go, I also myself reallocating that capital once it comes back into deals like that. With the only caveat being mobile home parks.
Nice.
I still love mobile home parks for the reason that the tax benefits are huge, and the sense that like you look at those in the long term hold play, right? Your land will keep going up in value, right? There's less and less of them, so I like those in long term hold. But besides that, like very very selective on the real estate we get involved in.
Okay, so mostly you're looking to exit on most of your multifamily, reinvest them into private equity because you know what they say, mo- uh, real estate creates the most millionaires, but private equity. I think the quote was like 96% of millionaires are made through real estate, but 100% of billionaires are made through private equity or something like that. That's what the quote.
Something along those lines, yeah. But the real estate thing is a really good play for some people depending on where you are in life,
Mhm.
right? Like if your goal is preserving, it can make a lot of sense. But if your goal is growing, right, actually building, so think about it. Think multifamily, for example. Say you've got a 100 deal in Dallas, Texas, right? And there's only so many things you can go do. You can go change the roof. You can go put new finishes in. You can go do the floors over. You can go add some amenities. But what will happen is that you're capped out on what you can go charge for rent based on what your neighbor is charging, right? The market will only supports so much. So if your unit's getting 1,300, you deck it out entirely, and the market max is 1,500, you're not gonna get more than that. The market won't support it. In business, there's some more other like levers you can go pull for growth, for efficiencies, for scale that you're not capped out in that sense at all either. So we view it as a much more opportunity in that sense right now.
Well, I also think that real estate is almost like the first natural progression into funds, right? You go into some of these fund, like specifically, you and I know them well. A lot of these different fund masterminds, it's mostly geared towards real estate because that's like the almost the easiest entry for most people. They go out, they find a deal, they raise capital for the deal. The deal makes sense because it pencils, it's an asset, it's appreciating. Everybody wants to invest into real estate in America. But I think also, because even for me right now, I'm like, I hate real estate. I really do. There's something about it. So I'm like very excited for us to be starting up the lending fund. And then I'm like, yeah, I definitely want to move into PE because I love business. I've got really good partners that understand culture, understand leadership, understand growth, business growth. And I'm like, it just feels like that makes more sense than continuing to real estate. If I want
Well, it's
tax advantages, then that's good. But go ahead.
yeah, it's also too the real estate market is just so tied to the treasuries, right? In the debt market,
Yeah.
where in a business, if you're buying a business at a 4x multiple, right, that's 25 times earnings.
Mm.
And if debt's at 6 or 8 or 10, sure, it impacts it, but not as much as you think, right? Like that's spread over your debt at 2.5 to 5x, right? Like you've got a lot of margin to go play with in that room versus being 25, 50 bips plus or minus your debt, right? Which is really tough in multifamily right now. It's nice having something that, yes, there are other macro factors that can impact the business, but you're not tied to the debt market as much as in real estate.
Well, and I think it's and what you mentioned earlier too, I just think it's too easier to pivot. You can only do so much with a property. You can only add a roof or add a certain amount of amenities, which is only going to do a certain things. But you can, in a business, completely pivot, add a whole new service, add a whole new product that then, especially if you're adapting to AI, which like I can't adapt AI to a multifamily unit really, but I can come in and completely change the profit margins on a company by adapting with artificial intelligence as it becomes better and better. So there's so much more you can do in a business with time and with technology than you can with real estate. And so you're just almost handcuffed in a sense with real estate. Interesting.
Yeah, no, it makes a ton of sense, and um,
Sorry. I was just sorry. It wasn't that wasn't that was more of like, hey, we're having a conversation now about this because
yeah,
oh
no, no,
yeah, it's real.
I agree. Like there's more you can go do, and also too, it's about finding where you have an advantage. Like right now, I have no advantage going to buy multifamily, right? Like I have no competitive advantage versus someone else. So it's just figuring out where you have a level of edge.
That's good. Do you find, because I know, so just even going back to the freedom framework, because I want people, if they're listening to this podcast and that's where they are, I'm like, yes, go talk to Sam. So, what are some of the main things that even in your framework community that you do? Do you find that it's a lot of PE people looking or people wanting to get into PE, or do you find it's more real estate people? Or, and then what are the type of things that you guys dive into in there? I'd just love to even talk about that because I think you serve people at a really high level. I've seen some of your awesome meetups. I actually know some people that have gone to some of the events that you've done, and I think and I think you've done one or maybe two, but I know some people that have gone to it and said just great things about it, man. And so I would love to hear, um, I'd love to hear a little bit more about your Freedom Framework community, man.
Yeah, so originally we started from the lens of raising capital, and that was it. And in turn, we found was that most people who were, fund managers or operators, they were interested in all these other areas, right? And most people, when it comes down to it, their focus is how can I go do things that I enjoy with good people that pays for the life I want to go have. And we found was a lot of our audience now are people who are saying, hey, I'm a $200,000 a year plus earner in corporate, and I want to do this the next 30 years. I want to potentially go have a really quick path to getting the cash I need to go replace my income. So a lot of people are focused on buying their own deals and buying their own companies. And what we see now is a lot of people looking to go acquire small businesses where you can go that 200K, for example, right? And go back to the earlier in the conversation, you can go buy a business that's $2 million, right? Or even $4 million with the right SBA structure. Business that's $4 million, $5 million of free cash, maybe million two, right? That can go pay you a few $100,000 a year after your debt service, after your taxes, after your insurance, after your, hiring a leadership team if there's not one in place. So that's a much quicker path in terms of number of transactions needed to go replace your income. Where being a fund manager is a longer term play, right? We're trying to help solve that with the income fund, right? In terms of that middle ground, right? But a lot of it becomes, can these deals perform to a certain point where I can have that big pop exit and go reallocate capital eventually to myself? So what I'd say is it's a lot of people in the corporate world looking to go break free and have that optionality by buying businesses, by raising capital, by buying deals themselves too.
Well, that's awesome, man. And you and I will have to talk too because as we help people to start funds, they may need income along the way. And so
There you
that
go.
would be really good. I think there's been also a really unique emergence because of like Cody Sanchez and other people along the way that have almost ignited this desire for people to own companies. And depending on how you structure them too, like seller financing them, they could be very lucrative. Do you find that like do you teach mostly, hey, this is how the SBA go structure it with an SBA loan? Or are you guys talking, do you find a lot of people are trying to do seller finance deals and things like that? Because I think that's a really unique play as well.
Yeah, I think we see a lot of like there's always a little seller finance or seller carry in a deal. Like you need that, right, to go protect yourself. So for example, if someone, if there are any issues in the company, that seller carry is usually forgivable, right? You have that as, collateral where you don't have to go sue that person. You can go try and take it off the seller carry. So there's a huge value in that too. But the best leverage you'll get is from SBA financing in terms of lowest capital down, right? Usually a level of seller carry on top of that too, to go, your capital can go really far in deals like that too. What I'd say is that if deals are on market, think of a broker too. They don't want so much in seller carry or seller rollover, right? At the same point that's how they get paid too. So if you're going off market, right, true direct to owner, you have a lot better luck at getting a more creative type deal structure as well.
Yeah, that's good. And that's the stuff that gets me the most excited. I do a ton of creative deals in real estate, and so I'm like, yes, I think it's fantastic to be able to do that in that area. Okay, so this podcast is called Funds on Fire. What is something currently that you're doing, that your fund is doing, that Freedom Framework is doing that really fires you up?
Yeah, so I'd say it's the two funds we're working on right now. Like one in the paving space, I think we're super early there in a good way. There's a lot of interest from the institutional side of it. So I think that's a like very new take on a very boring space, right? Very dated space where, like, for example, we bought a company that was doing $12 million a year of revenue with no website, right? So like
Good,
the
man.
ability to go bring in like a level of modern marketing and systems and stuff, so we see huge upside there.
I mean, if
And then they're on
value
our
add and even just like your systems and processes probably at that point.
For sure. So we see a huge opportunity there. And then on the income fund side, for small business lending, right? Where it's myself and a few partners, they're broke like big brokers in the business lending space. And now they're saying, hey, we've seen what a good deal looks like. We broker nearly $1 billion of loans. And now we want to keep that top portion of loans on our own paper and go fund them ourselves. So we see it as a huge opportunity for both us, but also investors to go see really high yield really consistently over a long period of time
Nice.
and provide liquidity.
Yeah, that's great. How much are you looking to raise for both of those funds?
So on the paving side of the house, we're doing our first $50 million raise right now, and then we're looking to go likely back with a few $100 million from an institution therefore after.
How do you go ahead?
Yeah, so it's saying kind of getting our platform to a place for our early investors, right? We can give them big step up as we go into an institutional round of equity and have them the option to go roll in their capital as we go look to go expand aggressively, but giving the investors a great win for being early in that space too.
Do you find it difficult to raise for two different funds right now, or are they just your like one conversation, two options?
Well, I think the type of capital that goes into them is totally different, right? For even take yourself for example. I'm sure you have your allocations broken out in different things, right? Where myself, I have some money in long term stuff. I have some money in stuff that pays me in terms of cash flow, and I have something that's also somewhat liquid. So I think they accomplish very different things. So that same person may invest in both, right? Because that money is taught for different purposes. So I think they're very non-competing in structure and actually really complementary. It's also great as a fund manager to say, hey, you know what, Devin, based on what I know about you and your family, this deal isn't for you at all.
Yeah.
But we have this coming in a pipeline. This can make a lot of sense for you based on what I know. When we have it, cool if I give you a call.
Yeah. That's good. Have you looked at I'm curious, even just for, like, we're just talking about structures right now. Have you looked at a customizable fund model that allows you to do all of that within like one ppm and you're just doing in different because there's really interesting models. That one that does leave you to a little bit more risk for your investors liability wise, but it does allow you them to have one ppm, one set of docs, and then they're investing into multiple, diversifying their investments with you. It's a really interesting thing that's becoming more popular.
Yeah, I won't likely use that. I think there are potentially some risk to it, right, in structure, and we want to avoid that, right? So they're all just two very different things, and they're both big enough where they support having, your legal fees tied to it, right? So it's not a huge issue in that sense. I think if you're doing 7, 8, 10 different kinds of deals, totally can make sense. But for us, we have two potentially large, really separate type funds that are not tied or correlated in any way.
Yeah, that makes sense. I just know a lot of people are starting to move into that direction of the customizable fund. It's becoming more popular. And so there are definitely pros to it, but there are definitely cons to it. And so
Yeah, and we've had a lot of fund managers who worked with us as well in the past who've invested with us, use customizable funds. We've had no issues there. I don't know the people at the company you're likely referring to who are all great people, but yeah, just us personally, kind of at the GP level, hasn't made sense to do that, where it gives you that total separation.
yeah. Well, good, man. Man, this has been fantastic. I've enjoyed our conversation, and you've got so much to say. Just even about that, I'm like, man, I want to dive more into that LinkedIn model that you're doing because I have done so well on Instagram. I'm like, I'm gonna
Yeah.
dive into LinkedIn, and so, man, I love that. I'm excited. I'm excited for us to get together and hang out at some point in the future and enjoy keeping up with you along the way. Where can people find you? Where can people come and either invest with you or join the Freedom Framework with you? I'd love to be able, if you can send them your way.
Yeah, so we're most active on LinkedIn. So Sam Silverman on LinkedIn. Our podcast is the Freedom Framework Show, or our YouTube is Sam Silverman Official.
Nice, man. Well, cool. Sam, I appreciate you. Thankful for you. And I appreciate you being on, man.
Yeah, thanks for having me.
Yes, sir. Wow. I hope you enjoyed that. I have a quick favor. If you've been enjoying the show, there's one simple way you can support us, and it's by hitting that follow button or that subscribe button on the app you're listening to. I want to level this podcast up in every single way possible, bringing you more value, incredible content and guests, and new strategies. Following the show and leaving a quick review goes a really long way in helping us to grow and continue to deliver top tier content. It's the only free thing I'll ever ask you to do, and it makes a bigger impact than I can possibly put into words. So thank you for being a part of this journey, and I'll definitely catch you on the next episode. To great success and greater impact. Peace.